The global financial order, long dominated by the US dollar, is now facing unprecedented challenges. The expanded BRICS bloc, consisting of Brazil, Russia, India, China, and South Africa, is now a formidable force. BRICS is pushing for a new payment system and possibly a shared settlement currency, threatening American economic influence and rattling Washington. This move could redefine global trade dynamics. In late 2024, President-elect Donald Trump responded with a blunt ultimatum. Any BRICS move to rival the dollar would trigger 100% tariffs, a threat of economic war. This declaration sent shockwaves through global markets. For BRICS, led by China and Russia, this is about breaking free from US sanctions and building true economic sovereignty. They see this as a path to greater independence. The Trump administration sees it as economic aggression, setting the stage for a high-stakes standoff. The tension is palpable. The world watches. Will BRICS risk conflict to launch their currency, or will US pressure force a retreat? The stakes have never been higher. The outcome could reshape global finance for generations. The implications are vast and far-reaching. The era of unchallenged American financial supremacy is under siege. This time the weapons are currencies and tariffs, not armies. The world stands on the brink of a new financial order. To grasp the stakes, consider what BRICS has become. Once a loose group of emerging markets, BRICS has transformed into a powerful coalition, now including Iran, UAE, Ethiopia, Egypt, and Indonesia, with Saudi Arabia possibly next. Over 30 countries want in, signaling a global appetite for alternatives to the Western-led order. BRICS Plus now commands vast populations, resources, and economic clout, including major energy exporters and manufacturing giants. The group's expansion, driven by China and Russia, aims to build a global majority to challenge US dominance. This is no longer just an economic club, it's a geopolitical alliance with a clear agenda. Initiatives like the New Development Bank and talks of a common currency are building blocks for a parallel system. BRICS is constructing a world where power is more evenly distributed. This context is key to understanding the current standoff over the dollar's future. BRICS's push to ditch the dollar, de-dollarization, is a strategic response to a world where financial power often translates into political influence. For years, the US dollar has been the backbone of global trade and finance, but this dominance comes with strings attached. BRICS nations see US financial weaponization, using the dollar and the global banking system to enforce sanctions, as a direct threat to their sovereignty and economic stability. The dollar's dominance lets Washington impose sanctions and control global finance, as Russia learned after its Ukraine invasion. This power can freeze assets, block transactions, and isolate entire economies with the stroke of a pen. Leaders like Brazil's Lula and Russia's Putin argue that true sovereignty requires financial independence. They believe that relying on a single currency makes their countries vulnerable to external shocks and political pressure. The plan isn't to replace the dollar overnight, but to gradually boost the use of national currencies in trade. This approach allows BRICS countries to build trust and infrastructure for alternative systems. Russia and China now trade mostly in rubles and yuan. Their economic partnership is a model for others in the bloc, showing that alternatives are possible. India uses rupees with the UAE, forging new pathways for cross-border commerce that bypass the dollar entirely. This slow shift chips away at dollar dominance, reducing US leverage and encouraging other nations to consider similar moves. BRICS sees the current system as unstable and unfair. One country shouldn't control global finance. They argue that a more balanced system would benefit emerging economies and foster global stability. By building their own payment systems and using their own currencies, they aim for a more resilient, multipolar world where no single nation can dictate terms. US economic pressure, ironically, is accelerating this shift. Every new sanction pushes more countries to seek alternatives. For BRICS, de-dollarization is about risk management and rebalancing power. It's a way to protect their economies from sudden shocks and unpredictable policy changes. The movement is methodical, not reckless. BRICS is carefully laying the groundwork for a new financial order, step by step. The goal: a global financial system less vulnerable to US control, where economic cooperation is based on mutual respect and shared interests. For BRICS, this is more than just economics. It's about shaping a future where their voices matter, and financial independence is the foundation of true sovereignty. BRICS isn't just talking, they're building new financial infrastructure. Two projects lead the way: the unit settlement currency and the BRICS Bridge blockchain payment system. The unit, backed by gold and a basket of BRICS Plus currencies, would serve as a cross-border trade asset, not a consumer currency. This commodity backing is meant to inspire trust and set it apart from fiat currencies like the dollar. BRICS, a blockchain platform, would link central bank digital currencies for fast, direct, and transparent payments, bypassing US banks and sanctions. Brazil, as BRICS president, is prioritizing these payment systems over a full common currency. The focus: build the rails first, then the house. It's a pragmatic, step-by-step approach to financial independence. BRICS is laying the groundwork for an alternative global system, one block at a time. BRICS' challenge to the dollar is anchored in real tangible assets, especially gold and energy resources. Unlike the dollar, which is largely backed by trust and government debt, BRICS nations are building their financial system on physical wealth. The bloc's central banks are steadily reducing their holdings of US treasuries and instead amassing gold at an unprecedented rate. Today, BRICS countries collectively hold over a fifth of the world's official gold reserves, a share that continues to grow as they diversify away from the dollar. China and Russia are at the forefront of this gold accumulation, treating it as both a hedge against Western sanctions and a solid foundation for their proposed unit currency. Their strategy is to insulate their economies from external shocks and assert greater independence in global finance. By backing their new system with gold, BRICS aims to project stability, reliability, and trust, qualities that stand in stark contrast to the debt-backed US dollar, which faces growing skepticism worldwide. At the same time, BRICS is actively shifting oil trade away from the dollar, using their own currencies and new payment systems to settle transactions. In 2023, a fifth of global oil trades were settled in non-dollar currencies, a figure that is rising rapidly as more countries seek alternatives to the petrodollar system. With new members like the UAE and Iran, and deepening ties to Saudi Arabia, BRICS now wields enormous influence over global energy markets, giving them leverage to reshape how oil is bought and sold worldwide. This powerful synergy, control over both gold and oil, enables BRICS to construct a new financial ecosystem, one where key international trades can bypass the dollar entirely and operate on their own terms. Settlements in rupees, yuan, or a gold-backed unit currency directly challenge the petrodollar's foundation, offering the world real alternatives for trade and finance. This coordinated strategy represents the most potent and credible threat yet to the dollar's global dominance, signaling a new era in international finance. Despite BRICS' ambitions, experts doubt a single currency is coming soon. The dollar's dominance is rooted in deep, liquid, and trusted US markets, hard to rival. BRICS members are economically diverse. China is a manufacturing giant, others are commodity exporters or developing economies. A shared monetary policy is nearly impossible. What works for China could hurt South Africa. Trade imbalances mean China would dominate any currency basket, making others wary of ceding control. True integration would require a central bank and fiscal union, institutions Europe took decades to build. Analysts say de-dollarization is real, but the dollar's reserve status isn't under immediate threat. Nearly 90% of global forex trades still involve the dollar. The likely future, a fragmented multipolar currency system, not a single BRICS currency supplanting the dollar. The world is moving toward regional blocks, not a new global king. Trump's answer to the BRICS currency push is pure America first massive tariffs. He's threatened 100% tariffs on all BRICS goods, echoing his past trade wars with China and others. The logic: the US consumer market is leverage, undermine the dollar, lose access. But this gamble risks a global trade war, with soaring prices for American consumers and possible recession. Retaliatory tariffs would slam US exporters, closing off key markets. The conflict is about two visions. BRICS uses finance and trade to build a new order. Trump wields tariffs as a blunt weapon. The result could destabilize global trade. Will tariffs force BRICS to back down or harden their resolve? The stakes: the future of the global trading system. The world braces for economic shockwaves. The BRICS-US standoff marks a new era of global economic rivalry. For Americans, the dollar's reserve status means lower borrowing costs and cheaper imports, benefits now at risk. Erosion of dollar dominance could mean higher interest rates and pricier goods. Trump's tariff threats add immediate danger: job losses, inflation, and instability. For other nations, BRICS offers a chance to escape US dominance, but also forces tough choices in a divided world. Smaller economies risk being caught in the crossfire of a US-BRICS trade war. The BRICS currency move is part of a larger global rebalancing. A single new currency may not replace the dollar soon, but de-dollarization is accelerating. The world is shifting from unipolar to multipolar. Expect turbulence, rivalry, and volatility. The challenge: navigate this new landscape without triggering a global economic crisis.